afternoon, everyone. Thanks for joining us today. We have an update with Microbix. CEO Cameron Groome is going to walk us through some recent developments. I think it's been about two and a half months since we did a webinar. So this really will just cover recent events. For anyone that's new to the story, I would encourage you to watch some of the previous webinars on the Adelaide Capital YouTube channel, just to get yourself up to speed. The format will be a quick overview of recent developments, and then we'll get right into Q&A, which there's usually quite a bit. So with that out of the way, of course, I should reference forward-looking statements, which there will be some in this presentation. If you'd like to know more about those, you can find them on the company's disclosure on their website. And like I said, there's going to be Q&A, so feel free to input those questions in the box at the bottom. With that all out of the way, Cameron, nice to see you.
Great to see you, Deborah. Thank you very much for setting this up today, and thank everybody for taking time out of their busy schedules to attend today.
I think you're going to walk us through some recent developments.
Perfect. Absolutely will do. I'll launch in. For anybody that is new to the company, certainly there's a lot of meat on the bones with what we do at Microbix. We've been in business for 30 years supporting the diagnostics industry, and more lately have moved into creating, manufacturing, and marketing some very innovative proprietary and branded medical devices, some of which are very topical today in the midst of the pandemic, but we have a much larger portfolio in the area of infectious diseases that is driving growth and will continue to drive growth of the company. I won't give too much in the way of background of the company, as I believe most of the people on today's call have followed the company for a little while at least, and I'll direct my comments for operational updates for fiscal 2021, which is the year ended September 30th, 2021, and into our fiscal 2022 outlook. To start off in that vein, fiscal 2021 concluded very successfully with very strong and satisfactory top and bottom lines. Our full audited results are expected to be released the morning of December 23rd, and will include detailed disclosures concerning our results, which are largely in line with expectations that we have spoken of in the past. We're now looking, of course, and we're in the early innings, but we're targeting strong growth again in sales and earnings for our fiscal 2022, having grown in the range of 70 to 80% in our top line for 2021. We likewise see very strong and material sales and earnings growth in fiscal 2022 to the point, in fact, and I'll talk a little bit more about this later, if we achieve our budget objectives for fiscal 2022, we may exit the year with fourth quarter 2022 earnings of about what we made across the full year of 2021. So just gives an idea of the magnitude of growth of which we speak. And we're generating that growth across our three sales generating segments, those being antigens, our ingredients business, our QAPs, quality assessment products, which are test controls to help ensure the accuracy of test workflows for tests, certainly like tests for COVID, but much more broad portfolio, and our viral transport media, which is the tubes of collection and stabilization media that are supporting COVID testing across Ontario. For our ingredients or antigen business, we are expecting for non-respiratory testing, which is the bulk of our portfolio there, that testing will continue to be under some pressure as patients continue to defer non-emergency medical care. And that is having an effect ongoing on depressing sales of that broad portfolio of products, although our respiratory ingredients are actually up. But we have considerably improved the margins of that business. So we're actually getting more dollars of margin out of the fewer dollars of sales that we're achieving in that business. In our quality assessment products, in our caps, such as the red flock swab-based controls and the liquid vial-based controls that we sell, we're seeing strong growth in all three market areas for those products. In the sales to lab accreditation agencies for the proficiency testing of clinical laboratories, very important, to the diagnostic test makers, the OEM segment for us, and to the clinical labs themselves for bookending their different test runs to catch any systemic errors that may creep in and avoiding the sort of disastrous effects that we've seen in the UK, for example, where between 40 and 50,000 false negative test results were reported and potentially may be the driver for a 15-fold increase in the active case numbers in the UK. Our viral transport medium, we're aiming for further sales to Ontario procurement, and for that matter, to other Canadian governmental buyers and private industry buyers as well. So very strong across all three of our revenue segments of our business. For our quality assessment products, for our caps, what I'd like to highlight is some of the innovations we're creating. And we've created some very strong products, leading edge controls. For example, just in the COVID field, which is the sum total of what we do by any means, but we've created leading edge controls for COVID PCR tests, for COVID antigen tests, and as we announced on the 17th of November, we've actually created controls for the major COVID variants of concern, those being the Brazilian strain, the Delta strain, the South African strain, and the UK strain in common parlance, and their particular biological-oriented designations for those common names as well. But adding those to our portfolio of fully regulated test controls. So those can be used by the clinical labs to ensure control of tests from different commercial test makers or even for lab developed tests, and make sure that those mutations that are contained within those variants of concerns aren't in any way reducing the accuracy of tests. If a segment of the genetic code of the virus, for example, that you've selected to develop your test has varied as a result of these mutations, it can lead to false negative results on your tests. And it's essential that laboratories are aware of any of those variations. And most often, test makers are not disclosing what particular segments are used in their tests for the amplification in PCR, so that it's more difficult for labs to know precisely whether those tests will be affected without independently verifying that. So very good innovation to add to our portfolio there. And we're also working on antimicrobial resistance oriented test controls, such as in our alliance with Sydney, Australia-based SpeedDx that we announced in April of last year, a world-leading developer of tests for bacterial infections and distinguishing whether or not they can be successfully treated with different antibiotics. Those tests require a higher level of control that we're able to generate and provide. We have ongoing work on that front, as well as on multiplex controls. So whereas, for example, last year it was great if you had a test that would PCR test that would look for COVID, now health systems and healthcare providers are looking for tests that can diagnose a variety of respiratory ailments. So for example, tests that look in the same patient sample, the same swab-based patient sample, tests that actually can detect between COVID, influenza A, influenza B, respiratory syncytial virus, RSV, and so forth. And we're right in the thick of that transition as well. So the biggest growth driver for our CAPS business in fiscal 2022 is actually likely to be our work with the diagnostic test makers, the OEMs, for inclusion of our CAPS in with their boxes of test cartridges at fixed ratios, driving a predictable and high volume sales level for our CAPS on a going forward basis. And our interactions are very close, building on our longstanding ingredients business and relationships with those companies in some cases, many cases, and driving continuing growth. And just in order of magnitude, it actually is orders of magnitude in fiscal 2020 when we just began creating the swab-based test controls. We sold about 10,000 units of that product. In 2021, we sold well north of 100,000 units, and we're looking at multiples of that for fiscal 2022 budget numbers. So very strong continued growth in our CAPS, and that also likewise includes very strong growth in the liquid format controls that are in these small vials that typically have a controls volume in the range of 0.
I think we lost you for a moment, Cameron.
You did, but I'm pleased to report that I'm back. Hopefully we won't have too many interruptions. With the growth we've had, our internet's bandwidth is getting a bit strained these days. So another thing we need to upgrade our capacity on, and we'll talk about. I was speaking of our VTM, and I was about to say that I'm very pleased to report that in our first fiscal year of providing viral transport medium, manufacturing it, we have produced and delivered more than 1 million vials of viral transport medium. That's great for a bald guy running a science company to be able to say more than 1 million. But it's a very, kidding aside, it's a very successful start to this new product line. Not only did we create a successful formulation, but we also innovated a semi-automated production method that enabled us to supply a strategically meaningful quantity of viral transport medium of top quality product to the province of Ontario in a useful time frame. If we had not innovated those production methods, we, like many companies, would have been waiting on back order for the kind of automation equipment that we'll now be receiving in Q1 of calendar 2022 that will take our capacity up 5 to 10-fold from where it is on our semi-automated production. But that would not have helped in the crunch times, in the most severe crunch times, for providing useful quantities of product. So we've been producing at 50,000 vials a week using our semi-automated production methods, and been able to provide some substantial help to the province of Ontario specifically. So in aggregate, I would reasonably say that we're very much succeeding with the transformation of Microbix into a creator, manufacturer, and marketer of innovative, proprietary, and branded medical devices. All of our CAPS and our VTM are medical devices that are regulated as such. And that takes us from a more anonymous maker of test ingredients to a provider of critical products that are supporting the infectious disease testing efforts of public health and industry. So, for example, if you are tested for one of many infections, your tests might rely on Microbix antigens, even though they're under any number of name brand companies' branding. We're the critical biology at the heart of that. And that's what we've done for many years. But now, should you be tested for respiratory virus, the technicians may have been trained using Microbix onboard CAPS kits. These are kits that we sell of a selection of positive and negative controls for training technician and qualifying new instruments for use. The sample may well have been, your test sample may well have been collected using Microbix's DxTM branded viral transport medium. And the test workflow at the lab, the accuracy of that workflow and the tests may have been ensured using our Red Flock CAPS controls products. So really, in Ontario, that could involve symptomatic testing by public health, could involve screening in your workplace or public schools, and it could be in relation to international travel as well, with a variety of clinics supporting private industry tests for folks that have to travel for business or pleasure. So we're proud, very proud to be helping on such a broad basis. And frankly, we couldn't do it without the ongoing support of our many shareholders, many of you who are on this call. So thank you very much. Another thing I want to comment on before we go over to shareholder questions, which I know we'll have some very well-guided questions to address, but I want to comment about our financial health, our operational plans, and how we foresee 2022 fiscal year unfolding. First off, with respect to financial health, it's now very good. We currently have more than 10 million Canadian dollars in cash on our balance sheet. We have a current ratio that's current assets over current liabilities. So assets that could be turned into cash within a year over liabilities that must be paid within a year. That ratio of financial health is more than 4.0, which is by all measures quite strong. And our debt to equity, we've been reducing our debt at the same time we're building up our equity, and that is down to under 0.5, which again is evidence of the financial strength that we're demonstrating, or around 0.5. And that strength should be maintained. And even as we continue to expand capacity and we move to automate fully automate and partially automate our CAPS and viral transport medium production. And we have a fiscal 2022 budget that includes over $2.5 million of CapEx, capital expenditures, towards completing the CAPS-oriented renovations at our second site, 235 watt line equipping for semi-automated CAPS manufacturing, and our VTM, viral transport medium related renovations to our third site, 275 watt line Avenue, where we'll be renovating and equipping that. And before mid-year of 2022, those two projects should enable us to be producing at 5 to 10 times current production levels for both CAPS and VTM. That really gives you an idea of how we're driving to scale the business, including upgrading systems for LIMS, EQMS, and ERP systems to be able to control the logistics required for that heightened level of activity up and down the line. I'd also like to comment about how our fiscal 2022 results seem likely to unfold, and that those insights are based on the budget plans put together by our management team and as we presented to our board just a couple of weeks ago. And while we're not at the stage of providing formal earnings guidance, it's still important for you to have an accurate sense of what's likely to unfold through the year. As we look to that, it's important to know our budgeting process, and that's driven by a very detailed bottom-up approach, whereby every sales dollar needs to be supported by identified sales of a specific product to a specific customer. So these aren't blue sky projections. These are very detailed on what our reasoned analysis of what we expect to happen through the upcoming year. So on that basis, we see each quarter of fiscal 2022, and of course this is all forward-looking, and we do rely on safe harbor provisions for this. But we see each quarter of fiscal 2022 being up materially from fiscal 2021. But that will not be as a straight line quarter over quarter. There is some fluctuation associated with just the timing of how we see different customer orders unfolding. So most notable in that will be Q1 and Q4 of the fiscal year, with Q1 being our seasonally weakest quarter for sales, and Q4 reflecting all of the year's progress and stalking into the winter of 2023 by our identified customers. So in fact, we see Q1 booking our first net loss of the year, due in large part to the debt repayment that announced and made on October 1 that has a non-cash accounting charge associated with that debt payment, and that's described in our October 1 news release. And in contrast to that, and as I mentioned earlier, our Q4 2022 net earnings might actually match what we make across all of fiscal 2021, doing it the same bottom line single quarter, with a top line sales number that could approach $10 million just for that one quarter. So some very dynamic and positive things unfolding for us in 2022. A couple of things I'll also mention just for the analysts on the call. We are taking steps aggressively to manage supply chain risk that we do see emerging, and will be increasing our allocation of capital into non-perishable raw materials to properly protect the company's production capacity in fiscal 2022. And we'll also be seeing some increases in SG&A, not for any bloat reason, but just to support the scale of growth that we're seeing emerging. And there will not, of course, be some of the Ontario Together Fund grant offsets on that SG&A in fiscal 2022, and we can cover that off in detail later. So in summary, for the company, we're continuing to build ourselves as that profitable and high sales growth life sciences business that's broadly supporting the global diagnostics industry. And what we do see very much is the customers for our medical devices, are just fantastic group. These are including leading test makers, global test makers. They include leading clinical labs, essentially a full spectrum of the lab accreditation authorities that actually are the folks that ensure the quality practices in the clinical labs, and as well as governments, even on multiple continents. So we're matching this, we also, of course, have to grow our capabilities and our product portfolio and our capacity, and that's all of what you see us working on. And with that, we've recently reached 100 employees for the company across our 3 sites, adjacent sites here in Ontario and Mississauga. And things are proceeding very strongly, and it's a wonderful team that I have the privilege to lead. We have incredible bench strength in our team, and not just those whose names might appear as senior managers in presentations or on the website, but really up and down the line. We have just an incredibly talented group of people that are doing superlative work. So with that, I think we can start to move into questions, but just before we do, I'd just like to say I very much hope that you'll continue to be a shareholder if you are a shareholder already, or consider becoming one if you're not and you're attending this presentation webinar for the first time. And I hope you'll have the opportunity to participate and benefit from the value that our team is working so hard to keep building. So with that, I'm very pleased to address any questions, Deborah, and I'll just ask you to read them so I can be thinking more rather than reading.
For sure, and it's easier for anyone that's just listening in. First off, Cameron, as always, congratulations. You've done a fantastic job with the company over the past little while. The financial situation, as you alluded to, has never been better, and lots of capital to execute on your growth strategy. So congrats, and thanks for being a good steward of capital. Getting into questions, I will try and keep it thematic so we're not jumping all over the place. But I don't believe you mentioned Kinlytic in your update. And I know some investors were looking for an update on timing or what's transpiring there. If you don't mind providing a little bit of a overview and update.
Certainly, we have identified a group that we're working to reach a definitive agreement on. And I'm very pleased with how that's unfolding. There are some remaining matters to conclude on that, one of which, of course, is reaching acceptable definitive documentation, and the other is working through satisfactory project plans and funding plans with a counterparty. So that is progressing, and it is moving in my view satisfactorily. I think it'll be a photo finish as to whether that would be concluded by the end of the calendar year, just US Thanksgiving and so forth, and some of these matters that come forward. So I think if we do see success in that, which I'm hopeful we will, it'll probably be into the new year before we would reach a definitive agreement. But I'd be very pleased, and I think shareholders would be very pleased with the conclusion of something along the lines of what we're working on. So it is still very much active. It is carried at a value of 0 on our balance sheet. So this is pure optionality at this point. And clearly, as our operating businesses become healthier and healthier, we become more and more of a credible partner to move forward a program like Kinlytic. And just for anybody that's less familiar with Kinlytic, this is a very successful clot buster drug or thrombolytic. It has treated more than 4 million patients in North America through the drug's history. And Microbix owns the innovative biological drug that is Kinlytic urokinase, our product. And what we need to do is validate new manufacturing and prove that the newly manufactured product performs equivalently to what used to be on the market as an approved drug in the US and Canada. We have all the technical capabilities to do this. It's a cell culture-based production method that we do, in our laboratories as a part of our viral antigens business. But no regulator would ever let you make a human drug in a facility where you grow human viruses. So it needs to be done in another separate GMP facility. And it's about a $20 million project to refile for the catheter clearance indication for that drug, which is about a $400 to $500 million North American market, depending on what market research numbers you factor in. And,
are those US figures?
Pardon me?
Are those US figures?
Those are US dollars, yes. IQVIA, the old the rebrand of IMS, dating myself here, reports U.S. 2020 U.S. sales numbers of 350 million. It's about in U.S. dollars, and it's about 40 million Canadian dollars in Canada. But this is predominantly a hospital-based product, and industry experts believe that the hospitals do not do as diligent a job as reporting sales to IQVIA as pharmacies do. So it's thought that those numbers may be understated by about a third. So that's why I'm giving a range of figures there. But our objective would be to capture about a third of the dollar value of those sales for Kinlytic urokinase, and we would look to retain at least 30% of the overall economics. So it could be a very large contributor to Microbix, but we're not wanting to slow the growth of our successful business drive by consuming all of the capital generated from our antigens, caps, and DxTM production for that one product. Would be slowing the growth of products and innovations in our core business. But interestingly enough, there's a narrowing gap between what we're able to fund and the need for partnering. So we might revisit it in future years if we didn't end up succeeding with a partnership, but that would be a board level decision that has not been made and will not be made. And it's very much a partner-driven strategy, will remain so. And that's something I'm very committed to.
Okay, that answers one of the questions that was remaining. Okay, let's move on from Kinlytic to, there's a general question. What will the benefits of the BSL-3 lab be?
For our laboratories, presently, we have BSL-2 plus level, or containment level 2, if you want to look at it. And that regulates what types of viruses that we can work with. And some of those classifications, for example, we would be able to work with dengue virus, but not chikungunya. And we would be able to work with live flu virus, but not live COVID, for example. So one of the things on our CapEx budget is to upgrade a portion of the core of our laboratory to BSL-3 with the appropriate validation and control practices in place. And that broadens the suite of native organisms with which we can work and generate CAPS products or produce native antigen products. So we use for many of our products a blend, or can select between the native organism or synthetic biology as may be most suitable. But we really want the maximum of flexibility across those different production methods, and BSL-3 would better enable that. We won't be working with anything BSL-4, though. Those are the organisms that are the Ebolas and Marburgs and Henipaviruses and so forth. None of that will enter our laboratories. So we have no such plans, just in case anybody's wondering.
Okay. And the province of Ontario had the first right of refusal for BTM production due to grants. Shipments, I believe, were concluded at the end of October. Are you still selling to them as there's been no PO announced, or are you selling to other customers yet?
We have some small sales to other customers. We are building inventory at present, and our inventory is going to come in very handy as we move to reallocate our production spaces at 235 watt line to semi-automated caps production, which we'd stolen the better part of that space for semi-automated VTM production. So we're actually building up some inventory to manage the transition between our 235 watt line site, which was engineered for caps, but it's being used for VTM, to transport VTM into our third site, 275 watt line, using fully automated production methodology. So we bought ourselves some breathing room with our inventory and inventory that the province has right now. But there is zero indication that this relationship will not be continuing. But both parties are working to balance their inventory levels at present. And we will announce further purchases when they're received and our VTM is being continued to be used in Ontario. So I don't have firm updates to provide right now, but there is no indication that Ontario will cease to be a customer.
Okay. You filled the original Ontario government order?
That's correct.
Okay. And just waiting on follow-ons. Let me just get rid of some of these questions. There was a couple about other provinces. I don't know if you want to touch on that.
Yeah, we are increasing our activities on that level. It's been a bit of a challenge to provide strategically meaningful levels to other provinces. You know, our production at 50,000 units a week was being pretty much consumed solely by Ontario. And that didn't leave us a lot of leverage. We have done some runs on double shifting the semi-automated production at 100,000 units a week, but we found that's a bit of a strain for line clearance and so forth. So that wasn't particularly optimal, and we don't want to in any way risk our quality. So going after the other provinces before automation becomes a little bit more challenging. How many vials can we provide them? We take a meaningful amount of their production load off, and that really becomes much more competitive from a volume point of view and even from a price point of view as we move to full automation in the new year. So it's been something that is on our radar, but not ripe for consummation yet until we move to full automation.
Talking about the automation and the upgrades and the expansion, how much operational risk exists with the new capacity for both caps and VTM? Is this an entirely new production method? Is the risk around some of the automation that you're doing?
It's a great question. The wonderful thing about our semi-automated production methods is for VTM, for example, is that provides an immediate backstop to the automation system. For VTM, we're looking at a automation right through from filling to vial filling, vial capping, vial labeling in one automated throughput. The production of the active will of course still involve formulation and mixing, et cetera, the methods we're currently using. But if we had, for example, breakdowns on that line, it will certainly make sure we have the right level of potential wear point parts. And we've had some extensive learnings about failure points on different instruments, including in our bioreactors, including in our semi-automated, our cappers that we've used. Some of our guys could tell you more about vial torquing, lid torquing specifications than you probably care to know. So we have a lot of developed expertise on this and redundancies. And in our caps production, really where we're looking is addressing the emerging bottlenecks that we see as volumes continue to scale into the hundreds of thousands, and automating the bottleneck, an individual bottleneck step. We're not yet moving to full front to back automation in the VTM and the caps side of things, but automating the steps at which we see bottlenecks pending. And that enables us again to have flexibility that we can move between automated and semi-automated or manual production methods as be during these transitional phases. So it's something very much on our minds. I won't say that it's without risk, but I will say that those risks are being flagged in advance, and we're doing our damnedest to make sure that they're properly foreseen and there are contingency plans around those.
Is there flexibility as well between VTM and caps production? Let's say, for example, your VTM orders aren't what you think they are. Can you transition some of that potential capacity to caps or to another business line?
Very much so. We could certainly do filling of other medium using the same production line, and with an additional spend of in the six-figure range, we could move with different jigs from filling this size of vial for our viral transport media production into filling the smaller sizes of vials that are the liquid form of our caps production. Our liquid vial caps production today doesn't fully justify moving to an fully automated production, but we see that happening in the future. Volumes for this genre of product doubled in fiscal 2021 over fiscal 2020, and will likely double again. But it has not been the 10x increase year over year that we saw, more than 10x increase that we saw year over year for the swab-based caps SKUs.
Mm-hmm. And I guess one of the perceived risks that I touched on before is, not getting this big order from Ontario and having built all this VTM capacity. How would you anticipate to fill that huge capacity increase without an Ontario order, or maybe you can just talk a little bit about that?
Well, with capacity, with automation, we become much more strategic in terms of the volumes that we can provide. And we've already demonstrated we have superlative quality, on our VTM, for example. Some of the predicate devices were showing contamination rates of a couple vials per 100, and we're seeing contamination rates of a couple of vials per 10,000. So our quality is absolutely superlative on that. And for those that are willing to pay for quality, we're already competitive. Where we get even more competitive with automation is we can deliver big volumes that are strategic to people. So we'll be able to make in a day what we made in a single shift day, what we can now make in a week as we get our automation commission. And also, the more volume we're able to put through the system, then you're able to amortize your infrastructure over far more units. And if the unit numbers go up, then our costs can come down and we become competitive on price, volume, and quality. And that takes us into much broader realms potentially. Right now, we're eligible to sell across Canada with our VTM. If we so chose, we could make a 510K pre-market notification filing and gain access to the US market. Now, we haven't made that decision yet, but that would be another door for us for international sales as well. With all of the issues that we're all seeing about supply chain concerns, and they are real. And to me, they're going to get worse before they get better, particularly with the problems with the Port of Vancouver and getting supplies in and out of British Columbia, which is the most active, importation site into Canada. Having secure domestic sources of supply is a critical issue for these strategic products, and certainly that's not lost on anybody in Ontario procurement either, I assure you.
How are you dealing with your supply issues? Are you seeing any for your inputs?
Yes, we are. Our team's done a fantastic job of managing those issues. It is challenging to know what is going to be in short supply next. So you're playing a game of foresight and anticipating what may be most in critically short supply, and making sure you have adequate quantities of those. But there's also an element of whack-a-mole in trying to identify what obscure input might be in short supply next. So we're looking, for example, at putting between $1 million and $1.5 million of our working capital into non-perishable raw materials supplies. So going from a normal level of maybe 3 months production needs to out to 6 months production needs, to ensure that we don't get caught short. Last thing you want is having orders you can't fill. So we're taking proactive steps to look at that. And that will affect some of our cash flow operations numbers potentially in the short term. But I'd much rather, in a potentially inflationary and shortage environment, I'd much rather have inventory than the cash, as long as these are non-perishable items that we will ultimately use. So that's something very much on our minds, and we're very fortunate to have the working capital available to be able to make those commitments and give ourselves a lot more supply chain security.
Makes sense. I think at some point last year you were experiencing, or the market was experiencing, a shortage of swabs. Is that an ongoing issue, or has that fully been dealt with?
Well, Copan Italia, who is our wonderful partner for swab-based caps, and you can even see, for example, our co-branding, where red with stylized DX is our brand, and Flock, FLOQ, is the brand of Copan Italia, which is, from a lab point of view, these are called Flock swabs, and that's their brand. And these are very sophisticated medical devices where the fibers are all oriented perpendicular to a molded plastic head, and it absorbs the liquid very quickly and moisture very quickly and consistently from your nose or throat or other orifices, and elutes it very completely and reliably into the viral transport medium. So a flocked swab is much better for controls, which is what we do, than a spun fiber swab. Very consistent uptake of liquid and elution of liquid. And because of that close relationship, we have preferred access to swabs for the manufacture of controls. So that's not been an issue for us, and we're very thankful for that.
That's great. Switching gears a little bit, I have two questions that are very similar. One is, what percentage of your caps business in 2021 was tied to COVID controls, and what mix are you expecting for 2022? And then I have another question, which is pretty much the same, but just talking about the overall business.
Yeah.
So specifically, and then your overall caps and VTM.
In caps, a majority of sales have been tied to COVID and other respiratory viruses, as you might expect in 2021. What we're seeing happening is this transition from a single channel testing, from just looking for COVID to looking for a panel of respiratory viruses. And the first level of transition of that is seems to be looking for instead of looking just at COVID, looking for COVID, flu A, flu B, and RSV. And we're well advanced with addressing those needs for multiplex controls to provide manufacturers that are now introducing these multi-channel or multiplexed instruments. And we see that broadening out in a number of disease categories where you want to be able to make very clear diagnostic decisions, not just look and say, is it COVID? But if it's not COVID, well, then what the devil is it? And then being able to make the appropriate therapeutic decisions. And that flows across a whole bunch of categories of diagnosis, whether it's respiratory illness, whether it's gastrointestinal, hospital-acquired infections, urinary tract or sexually transmitted infections. We see this rolling out across, and it's really going to be a golden age, I believe, for the diagnostics industry, with all this molecular or PCR testing capacity that's been built out, and a heightening level of sophistication of the testing. So for all of us as patients, I believe we'll get much better healthcare coming out of this as a result of it, provided, of course, that governments and health systems intelligently redeploy the capacity that's been commissioned as a result of the pandemic. But we're really at the forefront of that.
Are you sure about that, Cameron? You expect the governments to rationally redeploy?
Well, the folks that we've interacted with in public health are really, I don't have any bad things to say about them. So that doesn't necessarily go to the top of every political system, but the folks that we've dealt with, at the ministerial levels, are, I think, really doing a great job.
Well, that's good. One question. So I don't know if you're going to be able to answer this, but do you have better visibility for future growth in CAPS and VTM than you did previously? And I guess the follow-on question would be, at what position would you be looking to start announcing official guidance?
Yeah, I haven't thought about the position of starting to announce official guidance. I'd really want to talk to our Securities Council about this, and just what that involves, and maybe bat it around with a few people on the buy side, sell side. Deborah, I haven't given a lot of thought. I know it's something that's starting to come as we're getting more consistently profitable quarters. So it's something we'll have to look at, and I'll literally take counsel on. So let's make a note of that one, and we'll follow up on it.
And you do feel like you have better visibility than you did previously?
Yeah, and there's that visibility as we see. We still have some customer concentration issues. Like you'll see it in our MD&A. We're still in the high 60s in terms of customer concentration, but where top 5 customers may make up 65-68% of sales. But they're different customers than they were in prior years. They would have been customers oriented in the antigens or ingredients business. Now we're seeing customers in CAPS and in VTM and antigens, and we're starting to see that list broaden. And as we're becoming baked in, if I can use that term, to the different proficiency testing schemes of the lab accreditation providers, that's becoming a more meaningful revenue stream, more in the order of 2 million for that business than 1 million in fiscal 2020. That's essentially doubled. That's a very predictable revenue stream. We're starting to see greater predictability with diagnostic OEMs. A lot of those sales in 2020 were onboarding kits for validating new instrument installs, but we're starting to see those convert over into inclusion of our CAPS into kits of replacement boxes of cartridges, where Microbix controls will be included at a fixed ratio in the cartridge refills of different tests. So that becomes a more predictable recurring revenue stream. And as we secure more laboratories as customers, and those could be laboratories associated with health networks, for public health testing, those could be private laboratories contracted to, and those are even travel, can be some of the travel-oriented laboratories. As we see recurring revenues of those are getting more predictable in terms of the reorder rates, and more meaningful in terms of the reorder rates. VTM, of course, single SKU, single customer, are, well, not single customer, but vast majority going to Ontario Health Procurement Authorities. Their inventory management, does not depend on our wants. So we have to work with them in terms of drawdowns and refills, and even that flows into fiscal year elements as well. So, so that will spread out, I think, as we develop a broader customer base for that very new business. Keep in mind, that's gone from 0 to 4.5, 5 million range in a year, and certainly won't be going away. But there's inherently lumpiness in that. Until it broadens out. We're also looking at different DxTM formulations and how much of an imperative that should be. We've created one at the express request of Ontario authorities, but there are other other types of viral transport medium that we may validate and start producing to broaden out that portfolio of products as well. So that's on our radar, but we're spoiled for choice in terms of priorities right now, and don't see that ending. So we really got to be careful about what we go after and what order.
Well, it's good that you're in a strong financial position to be able to pursue multiple growth avenues at the moment. Cameron, we're coming up on the hour, but I have a number of questions still outstanding. Are you able to stay on for an extra 15 minutes, or do you have?
I certainly am. Yeah.
Okay, great. So let's go back to CAPS, because there's a couple other questions I had on that. So first, will you be announcing these CAPS partnership agreements as they're concluded? We've been hearing a lot about the work going on, but there have been no agreements announced since SpeedRx.
Yeah, and it's a great question. I mean, the level of interaction is very intense and high level and ongoing. Where we've actually been working very extensively with parties is on a handshake and lockup basis, and actually moving to formalized documentation has been a secondary priority for both parties by necessity. So, by way of example, we started working closely with Copan Italia for about a year before we formalized our alliance with them for flock swab, for controls on their flock swabs. So sometimes the paperwork is catching up on the reality with respect to these, but there are instances where there's a mutual reliance that's quite advanced by the time we're actually in a position to announce a definitive agreement. But we don't want to be in a situation where we're disclosing every twist and turn of a co-development project. It's just not a way to responsibly build trust between partners.
Got it. And can you explain where the 4 million or so above your current run rate is coming from to reach the 10 million top line guidance for Q4 fiscal 20?
Yeah, majority of that growth will come out of CAPS,
Okay.
and the majority of that CAPS growth will come out of some of the OEM relationships that we're now working on. So now not working on, but now actually in the middle of. So so that is very, again, as I said earlier, it's very visible by SKU and by customer. Just give you an idea, I'll just turn off my virtual background for a minute, just so it's not buzzing out everything here. But this is the sort of thing we do for a board planning exercise. That is, our briefing binder for our board for the annual offsite we had a few weeks ago. So we don't mess around in terms of the quality of our planning to be able to execute on the growth plans that we have. And this is the 5th year we've gone through these exercises of detailed planning and also setting specific strategic objectives for myself and all of my direct reports that guide our actions through the year. And we achieved about 90% of the strategic objectives we set for the senior management team in 2021 fiscal, which is really, I think, why you're seeing a just, relentless progression and growing success.
Okay. And can you revisit your mention of the likely impact of the debt repayment to your Q1 2022 earnings?
Certainly. We repaid $1.3 million of outstanding debt announced on October 1st. There's a news release concerning that goes into the details, but I'll recap them here. So when that debt was issued, there were the company was in a very different situation, of course, and there were warrants and attached to the issuance of that debt, and the cost of those attached instruments, as well as the setup legal costs, were being amortized across the full life of that debt. So when we repaid it early, the book value of the debt was only about $800,000 as a liability, and that liability was gradually getting written up as those amortized those expenditures, those setup charges, if you will, were getting expensed across the full life of the debt instrument. So when we repaid it early, instead of waiting for its 2028 maturity, it meant that all of those got expensed upon repayment. So it got marked up to the book value. That the book value of the debt was only $800,000. The amount that had to be repaid was $1.3 million. So there's a non-cash charge of about $500,000 that will be expensed in Q1. So again, non-cash, these are accounting entries, but it will count as a non-cash one-time charge against our Q1 earnings of about $500,000. Is that reasonably clear, Deborah, as much as IFRS accounting can ever be?
Yep, I was just typing a response to another question. Sorry about that. No, that's very clear. And then I've got a couple other questions, a lot around COVID. I know that's been something that has been discussed in the market about your
exposure. Been in the news a little bit lately.
Yeah, well, I mean, your exposure specifically, yeah, it has been in the news. Things in Europe certainly don't look that promising right now. I guess one of the questions, and maybe you kind of touched on this before, but how significantly will 2022 define Microbix as a COVID play? This is something that's been asked in a variety of different ways over the past year. I guess it's really like, how do you position the company in a post-COVID world? How much exposure do you think you really have? I'm not going to get you to estimate when you think COVID will actually be over.
It's a good question, legitimate one. I see some of the companies, for example, doing travel testing. I see some of them that are broadening out their product offerings and moving into fully accredited laboratories, which is going to be great for everybody to have, again, that greater testing capacity, sophistication, convenience. I've had conversations with other groups in that travel testing field, for example, that have told me, I've inquired about what are you using as a quality system, and they've told me, well, we don't have one. Treat it, consider us as the pop-up kiosk in the middle of the mall that comes up at Christmas. We won't be here come the first week of January. So that are, consciously temporary with regards to COVID. We are the furthest thing from that. We were in the infectious diseases field pre-COVID. Now, granted, as an ingredients maker, not as a medical device company, but our portfolio of expertise is very broad. We have very strong expertise in a whole suite of respiratory viruses and bacterial infections. We have tremendous expertise in prenatal screening and maternal health and fetal health testing. We have great expertise in matters such as gastrointestinal diseases, hospital-acquired infections, sexually transmitted infections, all of these areas are going to see better testing capacity and better diagnosis and treatment decisions coming out of COVID. And this is where we're very much positioned to be able to work across test modalities like we have successfully created products for COVID PCR testing, COVID antigen testing, COVID antibody or serology testing. That's just with COVID. We're working, as I mentioned, with the multiplex respiratory tests to provide optimal controls for the broader suite. And this comes in even from patient diagnostic capacity. You go in and you say, well, I'm coughing, I'm having difficulty breathing, and a COVID test comes back negative. Well, you go, well, what the hell do I have then? How can you tell me what I should do? Well, one, if you can immediately then nail it down and say, well, you don't have COVID, but you do have flu. Well, now you've got a pathway for therapeutic intervention of how you want to move forward and you also have from a public health monitoring point of view. If you've got more people coming to the doctor for respiratory disease and you're reporting that back, you say, well, our COVID's under control, but maybe our flu's running away on us. Or if you tested a broad enough panel, maybe you say, gosh, we have people coming in and they've got respiratory complaints, but we've tested for a dozen different viruses that maybe knock out 95, 98% of the culprits. You're starting to see people coming up with an unknown diagnostic. You've tested a very broad panel. Now you've got something that's very useful from an epidemiology point of view, identifying what may be the next emerging pandemic, or even from a biosafety or bioterrorism point of view of what the hell is circulating in my community. So we're going to see these things emerge, and I think we're right at the front of this transition into heightened awareness of infectious disease, and not some sort of draconian lockdown totalitarian thing, but just having a better visibility on what's going on in our collective health, our individual health, and our economic and social security.
Okay, and then we're seeing a lot more of the rapid home tests. Seems to be a transition going on from PCR being the main accepted test to these rapid home testing kits. Do you manufacture controls for those?
We do. We have very effective controls for the antigen tests that are being used in some situations. For example, our COVID antigen controls are recommended by Becton Dickinson for its little, Veritor cartridge reader that has a immunochromatography strip test go into the side and an optical reader for that. The home tests are thought, for example, in COVID, if you have an advanced symptomatic infection, they're pretty accurate, probably 90, 95%, maybe higher in terms of accuracy. If you're looking for the full spectrum from exposure to COVID through to symptoms, they're thought to only be about 80% accurate. So they're very good for screening if you wanted to look in an organization. We run the Becton Dickinson Veritor weekly at our facility, for example, and we're not expecting to use it to catch, to necessarily catch every case of COVID. If there was COVID, what we're looking to use it to do is identify, is there any COVID in the organization? And then you could do follow-up with the much more sensitive PCR testing to do diagnosis on an individual basis. And that's really the distinction between the two. And different people are trying different methods. Saliva-based collection as well is another one. But I think that's maybe becoming slightly less of an issue, as all of us have had flock swabs up our noses multiple times at this stage. The worry about that is maybe a little less extensive than it used to be. And the old saying, if you want horseflies, go to a horse. If you want a respiratory virus, go into your respiratory tract is probably, the best place to do your sample collection. Not the only place, certainly, but the best.
Okay. Switching gears a little bit, how will acquisitions be approached in 2022, given cash on hand and cash flow expected?
Great question. We're looking at it in a couple of ways, a few different ways. You always have to look with acquisitions. Do I buy? Do I build or do I rent? And for some supplier and technology issues, we've done a bit of a blend of both. I wouldn't necessarily rule out acquisitions in that respect, nor would I rule out acquisitions in products or distribution. But we're not required in any way, shape, or form to make acquisitions to sustain the growth track that we're on. It'd more be if we find the right fit at the right price, we'll consider it. I think our market cap is still quite low to effectively do acquisitions. We're probably trading somewhere around forward price earnings of about 10 times, which that doesn't suggest that you want to use a hell of a lot of currency of equity for acquisitions today. That could change in a year's time with several more quarters of good results. If we were trading at 30 times forward earnings, I might have more of an appetite. So that there's a temporal element there. The other thing is, we've been working very, very hard, and I question whether we have the surplus senior management bandwidth to successfully integrate an acquisition at this point. I think we might be in a better position in about a year. I'd like to have 2, maybe 3 senior executives with some surplus bandwidth to make sure that we could integrate an acquisition successfully. And today, I would question whether we have that surplus capacity. But again, I get asked as well about a NASDAQ listing. That's a $500,000, $500,000 to $700,000 annual expense to do that for full SEC and Sarbanes-Oxley compliance. Right now, that's a big burden on earnings. In a year's time, that might be a little different.
Well, the OTCQX listing is a more palatable option for now.
Right now, I think it's right-sized for us, yes.
I have a follow-on question from a previous question. So I'm going to repeat the first questions that gives you some context. So it was, can you revisit your mention of the likely impact of the debt repayment to your Q1 2022 earnings? And then the follow-on question was, the context of my question was your mention of the likely volatility of your quarterly results in fiscal 2022 and whether that will be a negative quarter for earnings given its typical seasonal weakness. So talking about Q1.
Yeah, Q1 I think will certainly be the weakest quarter of fiscal 2022. There's traditionally seasonality. There little to no proficiency testing lab accreditation revenues in Q1, just based on the traditional 3 times per year accreditation cycle in the United States and Canada and a good part of Europe as well. So there's a seasonal element that's down on that level, and then we'll have the impact likely of with the certain impact of the non-cash charge of about $500,000 as described in our October 1 news release further to the debt repayment. And then we will also have, from a cash flow from operations point of view, that includes changes in non-cash capital accounts. If we increase our safety stocks of raw materials inventory, that's going to have a one-time pull down effect on our cash flow from operations as we move through Q1. So, not that would come at any surprise, and I'm talking about it over here, but just to be aware of what those drivers are, and that they're conscious drivers, not that we're sailing blithely. Keep in mind that we held inventory flat in fiscal 2021, while we grew sales in the 70-80% range, and and that's from tight management of our inventories and our working capital, and good collections practices and so forth. So if we move those metrics, it's because we want to, not because we weren't paying attention.
Got it. Talking about inventory, what your current VTM inventory and weekly production rate?
We've built up. We've been continuing to produce at about 50,000 a week, and we have about 10 weeks worth of inventory now, and that's a build that we'll maintain for a while longer, and then we will likely be closing that down for probably 6 to 8 weeks as we move the physical location of production from building 2 to building 3.
Okay, and what's the shelf life of that inventory? Is there a risk of it expiring, having to be written down?
It does have a shelf life. Right now, I think we're approaching 12 months stability post-manufacture on VTM. It is typically used fairly promptly. You're not buying it to have it sit on the shelf, you're buying it to use it. And if we were to sell it to third-party wholesalers outside of Ontario, you probably have, typically folks want to see 6 months shelf life on something they're stocking. But for something like VTM, you could probably still move it with as little as 3 months shelf life. So it's not an immediate concern, but it's something we're aware of.
So it's sort of like 6 months shelf life for you to inventory it.
Yeah, correct.
Okay. And then can you talk briefly about the sales performance of your recent new distributors and resellers? Are you happy with them? And do you have plans to expand these further in the near term?
I think we're fairly pleased with some of our distributors have been doing a fabulous job and are really kicking ass. Other ones less so. And the latest one, Thomas Scientific, that we signed in July, is building up their molecular diagnostics franchise, but we think they're going to be a star. Some of our other ones, I won't name names, but there's some that have exceeded our expectations and some that have not met our expectations. What we typically have signed on to is providing new distributors a period of exclusivity in their territory. And if they meet their numbers, they have the opportunity to keep that exclusivity. If they do not, then they move to a non-exclusive basis. So we would have the option of bringing on other distributors in parallel. And similar to what we did for the United States, for example, we first signed one distributor, and then we've added others on a non-exclusive basis.
Okay. One last question for you, Cameron.
Sure thing.
Okay, this is something that we've been talking about a lot, which is your US trading volumes are still pretty low. So they're looking for an update on the efforts in that space and the new partner, Torrey Hills, and how's that program going?
I think it's going well. I've done some webinars with Torrey Hills, and their modality is to get a group of investors. These could be investment advisors, family offices, small cap funds, to attend a corporate presentation and listen to it, and they give us detailed feedback on those presentations. But it's a little bit, you're looking at investors that would add this to 50 client portfolios, add a holding Microbix to 50 client portfolios, or buy 1 million shares for a family office, or a couple million shares for a fund. They don't do that on a first meeting. no matter, how articulate I might be, somebody's going to actually want to watch a bit of a track record. Not everybody has the time to go back over our quarterly statements and say, what did they say, and cross-check, the webinar we did, Deborah, 6 months ago with what I said then with what actually happened, and do all that spade work for a small cap. So people typically tend to have a meeting, watch it, have a follow-up, look back on the notes in their notebook and say, did this company actually hit what it was going to do? And that's a fairly long turnaround for people to get comfortable. It's 2 quarters at a minimum, and maybe 5 or 6 quarters, somebody's actually going to ever pull the trigger, but it doesn't happen right away. So we didn't expect when we signed on Tory Hills that we were going to have immediate benefit from that when we did that in August. So we're still comparatively early days. We're 3 months into that process, but we've seen some days in the West where I've done a webinar with Tory Hills. We've had volumes of 150, 200,000 OTCQX, which is gratifying. And even these events, I had a cold call from a fund in Boston that called me, and I ended up getting on the line. They said, "Oh my gosh, it's so great to meet you. We were doing a screen for companies with high sales growth, consistent insider buying, and strong insider ownership. And Microbix popped up on our screen, our screen of criteria, and pulled down information off CDAR, watched some of the Adelaide Capital webinars, and we already own over 1 million shares. And I just had some questions to go over with them. Wow, okay, this is great to see, but it's an investment of my time and management's time and our investor relation efforts to develop these relationships over time and get strong, educated shareholders that have realistic expectations of what participating in the real growth of a real business, and that's what our objectives are.
Mm-hmm. One of the things we've been talking about, Cameron, is because over the last couple of years, there's been so much change within the business, and a lot of these calls do end up going for 90 minutes and having very specific questions about different aspects of the business. To maybe do a Microbix for Beginners webinar, again, just to set out what are the products, what do they do, what is this company, rather than get right into the minutia, which we tend to do a lot, which I think would be helpful for new people. Because
I think that's a great idea, Deborah. Let's make a point of doing that. Yes.
Yeah, because it is a complicated story in a lot of ways. Like when we first met, I had no idea what an antigen was. I would never have known.
Nobody did. Yeah.
So I think explaining some of the basic concepts goes a long way, because it's hard for investors to buy something if they can't think about it in a tangible way.
Yeah. Well, maybe we can do that, Deborah, as we come into Q4 numbers. We can do one, Q4 update for existing investors, and a bit of a tutorial. Where are we? Where's the company today? What ground up? What do you need to know about Microbix? What the heck is it that we do exactly? And that'd be helpful, having those two in parallel.
Yeah, I think that's a good idea. Anyway, that's it for the questions. Cameron, thank you so much for all your time and for diligently answering the questions. Was there anything you wanted to talk about today that we did not cover?
I think this has been, broad coverage. I just want to thank, all of our shareholders for entrusting us with your hard-earned capital, and just know we take it very seriously. We've got a great team.
I think we just lost Cameron again. Maybe give him a minute to come back in. But yeah, thanks for everyone that participated. Thanks for your questions. As always, if you have additional questions, feel free to reach out to me and I'll get those answered for you. And anyone that would like a one-on-one meeting, we are doing some one-on-ones, so feel free to reach out for that as well. And I don't see Cameron signing back in, so I guess I'll do the conclusion and just say thank you very much and have a great afternoon.